All right, we'll just let a couple more people join in and then get started. All right, Bud, we could probably let people keep joining if you want to at least go ahead and get started.
Okay, I'll start the introduction. Good morning, everyone. I'm Bud Jones. I'm a partner at Nisivoccia. I'm here today with Heather Litzbauer, Daniel Banker, John Mooney, and unfortunately, John Reinhardt can't join us today. He has been a part of planning these CMFO roundtables with myself and John Mooney for a while now. And I think they've been good, solid information and promoted a lot of discussion. And I hope that you'll join us in asking questions, posing questions during the presentations. First, Heather. Heather joined Northwest Financial in 2005, providing over 15 years of financial advisory, underwriting, and consulting services to numerous municipalities, school districts, and authority. She works closely with clients entering into the bond market by managing and structuring general obligation debt, pooled bond financing, renewable energy financings, and revenue bond transactions. She also works with municipalities and authorities tracking projects and providing cash management services, as well as detailed cash flow modeling and forecasting. In addition, as a licensed municipal securities representative, Heather provides various underwriting services for the firm, including financial modeling and analysis for municipal issuers, while working with the project team to ensure accurate and timely execution of pricing transactions. Heather is also an integral part in assisting the County of Passaic with forming its municipal reimbursement program under the county's $87 million allocation from the Federal CARES Act. The program was formed for the county's 16 municipalities as a grant program to offset eligible expenses in responding to the public health emergency based on the guidelines set forth by the U.S. Treasury. She provides project oversight and management of the program between NW Financial Team and the county. Daniel Banker. Daniel joined Northwest Financial in July 2018. He serves as the vice president for the firm and provides various financial service analyses for clients. Since joining the firm, Daniel has been involved with numerous redevelopment projects across New Jersey, including both market rate and affordable residential, hotel, and warehouse facilities. This includes the analysis of developer financing, financial projections, projection of new resident and school children's costs, and determining appropriate pilot terms for each project. He's highly efficient in the creation of financial models, including the creation of a partially automated redevelopment model that generates several outputs, including developer returns, fiscal impact, and tax benefit, which assists in many of the firm's redevelopment studies. He is also an integral part of the NW team that works with both the County of Bergen and the County of Hudson, providing grants to help small businesses through both counties' CARE Act allocation. He has helped curate and execute applications, implement web portals, develop the tiered review process, and review applications. He ensures that all facets of the federal guidelines provided to counties and towns are understood and carefully followed. John Mooney is a partner with Nisivoccia. He's a CPA, RMA, PSA, and has financial services licenses. John works with municipalities, counties, school districts, county colleges, and other entities. During the presentation today, there'll be 3 polling questions that you will need to participate in order to receive credit. And as I said earlier, please don't hesitate to participate, pose questions. We have a Q&A and chat items at the bottom of the screen that you should be able to use. Heather, Daniel?
Thank you for that nice introduction, Bud. So today we'll be talking a little bit about the American Rescue Plan Act that was recently passed in March 11th. $1.9 trillion stimulus bill, which a good part of it included funds that would be sent directly to counties and municipalities all across the country. Those funds can be used for replacement of lost revenues, costs associated with the pandemic, testing sites, vaccination sites, and a few other things that we will discuss later on. Other elements of the stimulus bill, it extended unemployment benefits. There was the second round of stimulus checks sent to certain households, housing and education funding, funding for restaurants and other social projects. There are 5 very important documents that go over the legislation. The first is the interim final rule, which was sent out in mid-May from the Treasury Department. It discusses some guidelines for the stimulus funds. There's also a fact sheet that the Treasury has provided that gives a summary for municipalities and counties on how to use their funds. In addition to that, the Treasury Department is constantly updating frequently asked questions on eligible uses of funds. They first came out with that in late May. They updated it June 8th, and another one was just sent out last night. And then there's also a quick reference guide that gives a quick summary of available uses. And then on Friday of last week, the New Jersey Local Finance Board came out with their own local finance notice, 2021-11, which talks about the program, talks about budgeting, and provides a lost revenue calculator that would need to be included in municipalities' budgets in order to use the funding for lost revenue. So we provided the links for all of these different helpful guides so you can review and know what you can use the funds for. And we'll be providing this presentation to everyone in an email format, so you will have access to all the links. So just give a quick timeline for the program. Currently, municipalities can submit directly to the Treasury if you are a CDBG municipality to receive your funds. Municipalities that are below 50,000 in population will need to submit directly to the state of New Jersey. That portal is now open with the state as well. On July 16th, there's a deadline to submit comments on the U.S. Treasury's interim final rule. The interim final rule basically discusses the legislation and gives basically guidelines of how to use the funds. However, it is not the final rule. There is an opportunity to submit questions and comments to the Treasury Department by July 16th, and they will take that into consideration. They will answer questions that you pose through their frequently asked questions that they keep on updating weekly. So it's really good that if you have a question on how to use the funds, or there's a gray area of what you want to use the funds on, that you should submit a question to see if that would be eligible. On August 31st is the first deadline for entities to submit their first interim report to the U.S. Treasury. This is for municipalities that receive their funds directly from Treasury, so population over 50,000. On October 31st is the first deadline for entities to submit first quarterly project and expenditure reports. This is for municipalities that receive funds from the state and the Treasury. They both need to submit these quarterly project and expenditure reports. This will be done on an annual basis. So every October 31st, this project expenditure report would be due. All funds need to be incurred and obligated by December 31st of 2024. However, all of the funds need to be expended to cover the obligations, and all work must be completed on the projects by December 31st, 2026. And this is mostly for the additional deadline of December 31st, 2026 is mostly for capital projects. You can decide to move forward with a capital project in 2024, but as we all know, it takes time to make final payments on projects. So the project needs to be completed by December 31st, 2026. For requesting funds, counties and municipalities with populations over 50,000, they must submit the request directly through the Treasury website, through the link provided. And then non-entitlement municipalities with populations below 50,000, you must execute an awards and conditions agreement with the Treasury Department. We've provided that link there to show you what this award terms and conditions agreement provides. Once that is executed, the municipality can request the funds from the state. The state has provided an Excel form that you have to provide all relevant information. So your SAM number, your DUNS number, that will all be included in the Excel file. Once you complete the Excel file, there's a button to submit that. It will take you to an email page. So the Excel file will be attached to that. You would then attach to the email the executed award terms and conditions agreement, and then submit it to the state. For budgeting and recording 2021 receipts, 50% of your allocation will be received in 2021. The other 50% will be received in 2022's budget. The proceeds are to be recorded as a grant fund unappropriated reserve through a Chapter 159 resolution. And then as you use funds for revenue loss, municipalities have to complete the state's revenue loss calculation worksheet and email that to the state through the website that's provided. And then the revenue loss calculation sheet must also be included on sheet 10 of the 2021 budget. This process will happen on an annual basis. So if you decide to use some of your funds for revenue loss, you'll have to do it for 2021 and then 2022, 23 and 24. You'll have to provide the calculations and insert it into the budget on sheet 10. For uses of funds for allowable expenditures, again, the municipality adopts a Chapter 159 resolution. You'll record the appropriation on sheet 24 of the budget, and then you'll move the proceeds from the unappropriated reserve account to the grant fund appropriation account. For uses of funds for capital expenditures, the municipality will have to do a capital ordinance. This is similar to how you would do a DOT ordinance, where the funding would be coming from the grant. And then the proceeds would be recorded as a capital fund appropriation. You move the funds from the unappropriated reserve account to the capital appropriation account. All of the information for budgeting and recording of these receipts is coming from the local finance notice. So it's important to review that and make sure that you're following the state's guidelines.
Heather, before we move forward on this, we had a couple of questions pop up and we want to address them as they're pertinent to the presentation here. Bud, you might want to chime in on this as well, being that this is more a budget issue. Joe Kowalczyk asked, what happens if your budget's already adopted? Can you bring the lost revenue funds that would have been reflected on sheet 10 as Myrna?
Yeah, that was my thought. I mean, prior to the local finance notice coming out, I thought what towns should do early on is calculate the loss of revenue item, because I would think that would be easier to do. Identify the amount and then bring it in as a revenue as Myrna in 2021. I'm not exactly sure because of the local finance notice. I think we need to pose the question to the state, but I think my thought process was, yes, bring it in as Myrna.
Right, and I expected one from Bill Homa first, but I guess Bill Homa waited for Joe to get his question in. And Bill's referring to other utility. Can revenue loss be used for swimming pool utility? I know we were going to get there. I don't know if you want to hold off on that one or if you want to address that one now as well.
Sure, we can address that now. Swimming pool utility revenue would be included. It's just how to do the calculation, because the state's worksheet, and we'll get to that later, only deals with current fund. It doesn't deal with specific utilities. So you can either, at the bottom of the worksheet for the state, you can provide the utility calculation, or you can submit a separate worksheet, since it is a separate utility, and do a revenue loss for the current fund and a revenue loss for the utility.
All right, another question popped in. I knew we were going to get them fast and furious once they started here. You know, could we use a bond ordinance if we're including those funds as part of funding on a larger capital project, like water infrastructure? It's curious that it's water infrastructure here. Just making sure it's not a capital ordinance and that we don't have to do two ordinances for one project. So my question to that would be, is this a project that was already started first? I don't know if that's a piece that we're missing here on this question, but I guess if we've started a project, a larger capital project for water, could we use funding for this as well, and make this part of the funding source for those ordinances?
There was a frequently asked question that was submitted recently regarding capital projects and the use of this money for things that had already been approved prior to March 3rd. March 3rd, 2021 is the start of the covered period, but there are some exceptions to that. So I'd like to just read that frequently asked question again before I answer that question, so we can get back to the group on that.
Okay, in the interim, Derek Macchia sent a note that the division has responded that in 2021 that the loss of revenue funds can be brought in as Myrna if you've already adopted your budget.
Great.
And then finally, I have one more here while we're on the topic. With the COVID emergency that was passed in 2020, can the amount of revenue loss anticipated exceed the payment of the COVID special emergency?
Yeah, I think it's all based on the calculation.
It's all based on the calculation. One thing from the local finance notice, which isn't clear to be allowed from my perspective, is that if you issued a special emergency to pay for the deferred charge, and you're spreading it out over several years, it specifically says in the interim final rule and FAQs that have been released that you cannot use proceeds to pay for debt service, including tax anticipation notes, bond anticipation notes, anything of that nature. So I do know in the state's local finance notice, they first said that if you're receiving funds, you have to first pay off the special emergency, whether it was funded through a note or unfunded. I'm a little concerned about the funded through notes, that you would have to use the funds first, because there is specific information about how you cannot do that. So I was planning on sending in a question to the Treasury Department, explaining the situation to see what their take is on that. But right now, I would think that that would be ineligible to pay off your special emergency note.
And Heather, you and I discussed when we were planning this session, whether the division or any state entity had the ability to have authority over these funds of the towns or counties. And I think we were in agreement that they don't.
That is true. Yes. All right. Are there any other questions, or can we move on?
I think there's two
John,
other
you're
questions in the chat.
Yeah, there's a question in the chat room there. So Bill Holm is asking if we should set up a separate bank account to be established for the American Rescue Funds. I didn't necessarily see anything when I was reading through that. I just know that we have to do the 159 to get it in. I don't know if any of the other panelists have seen anything like that.
I don't think it's required. I do think that that would be a good thing to separate and have a separate bank account, so it's easy for tracking, because down the road you could be audited, and you would want to have clear records of money going out from that fund that can be traced. So I wouldn't commingle the funds, I'd have them separate.
And that leads to the question that I was going to ask, but Joe asked it, what about any interest on that account? Do we sweep that back to current? Or I would think you'd have to. It's a grant, right? We're only spending the grant funds.
Correct. You can, there is a frequently asked question about earning interest on the account, and the municipality can keep that interest. And when we send out, we'll give you the frequently asked question number, so you can go look it up as well.
John, did you see the question posed by Dana Mooney in the chat?
Okay, we are planning a water infrastructure project not already funded, so we will need to bond for additional funds. I don't know if that's necessarily a question, but
I think that goes back to the capital ordinance and how you deal with that. If your water project is eligible through the infrastructure bank, you most likely can pay from two sources, one from the grant fund, and then the rest you could either fund through a bond anticipation note, a bonds issued on your own, or through the infrastructure bank if it's an eligible project.
okay.
Right, and Heather, I think you had some concern about, and I think you mentioned it a little bit already, about paying debt service with these funds.
Correct. You cannot pay debt service for the funds. So if you have a $2 million water project and you want to use $1 million of the grant, you would have to use $1 million in cash to downsize what you issue in debt. You cannot issue the debt and then use the grant fund to pay the debt service. That is not allowed.
The last question that's out there pertains to the slide that's up on the screen right now about broadband infrastructure and what exactly that consists of. So I'm going to let you take it away and keep that question in mind as you go through.
Sure. Yeah, that comes in later on in the presentation, but there are several eligible uses of funds. The first that we've been talking about, the replacement of lost revenue. for capital projects, water, sewer, and broadband infrastructure, public health expenditures, premium pay for essential workers, addressing the disproportionate public health and economic impacts of the crisis on the hardest hit communities, populations, and households, and then COVID-19 related negative economic impacts. We'll get into each of these further on in the presentation, but we'll first deal with lost revenue. So the analysis for lost revenue is based off of the last full fiscal year, so that would be 2019, prior to the pandemic, and projects forward at the greater of the last full three fiscal years prior to the pandemic, so 2017, 18, and 19, or at 4.1%, which is the counterfactual rate. So if your average growth rate over 17 through 19 was 5%, you would use 5% as your growth factor. Lost revenue is for general revenues, and this is defined in the interim final rule to include revenues collected by a recipient and generated from its underlying economy, and would capture a range of different types of tax revenues as well as other types of revenues that are available to support government services. The calculations do exclude certain things, and that's refunds and other correcting transactions, proceeds from the issuance of debt, proceeds from the sale of investments, agency or private trust transactions, intergovernmental transfers from the federal government. However, from shared service agreements with other municipalities or from the state, those are allowed. And then revenues from the following utilities: water utilities, electric utilities, and water supply related revenues from combined water and sewer utilities. Those three utilities are not allowed. And then, as I stated before, the state has provided a revenue loss calculation worksheet. We've provided the link below where you can download that worksheet. Saw some questions come in the chat.
Yeah, a couple questions popped up as we were going through this pertaining to Chapter 159s and how we're getting them into the budget here. The first one is, when you receive the funds, is my understanding that you temporarily place in unappropriated grant. I thought that you only create Chapter 159 for items that are used for eligible uses that are not capital projects or revenue loss replacement. I think you still need to create the 159 to bring in a line item of revenue and expense for this. If the money comes in, then yes, it sits in unappropriated grant funds until you pass the 159, and then you move it into the budget. You can also create the 159 if you know the amount, even if you haven't received it yet. So I hope that covers that one there. Then the second one is, after reading the Treasury FAQs, intergovernmental transfers grant fund appear to be a covered revenue for the base year, but the state has excluded sheet 9 from their workbook. Can grant funds be used as part of the calculations?
I think we'll have to take a look at that and get back to you.
Yeah, if we're talking about loss of revenue there, I think you have the next slide or two goes into the worksheet.
Yeah. Okay, so this is a summary of the inputs page for the state's revenue loss calculation worksheet. As you can see, sheets 4, 5, 6, 7, and 8 are all included. Sheet 9 is excluded, so that would be a negative number that you would have to input into the worksheet. And then sheet 10 and then sheet 11 for only the local tax. The library tax is not included. And then the delinquent taxes you would include on the worksheet. You do have to remember that you don't just put in the totals for sheet 4. That's the first line item. You will put the sheet for totals, but you'd have to go over each individual line item to make sure that there are not any exclusions. If things are not allowed under the guidelines, then you would put those as a negative number in the less NA items line item for each of the different sheets. So first you will put in the audited results for 2017, 2018, and 2019, which are all on the right-hand side of the worksheet. And then right to the left of that, you would either put in your AFS numbers for 2020, or if your audit is completed, you'll put that in there as well. From there, all the way to the left-hand side, you choose whether you're a fiscal or calendar year municipality. It defaults to calendar year. And then to the right-hand side, there is a local growth percentage. So from there, from 2017 to 2019, once your data is inputted, an annual growth rate, the average, would be calculated for you in that cell. And then when you look at the summary tab, your loss of revenue calculation will include the greater of the average of your last 3 years, or the 4.1%.
So Heather, you and I also discussed that the National GFOA had also put together a spreadsheet to calculate the loss of revenue. And they did include grant funds from, as you were saying, shared services from other local governments. And they also said from the state. Looks like it's allowable on their form.
It is allowable under the interim final rule. The only grant funds that are not is at the federal level. So we'll have to get clarification on from the state on why sheet 9 would not be included.
And I think, John, there are some more questions posed.
Yeah, do we want to jump in with a polling question real quick here, being that we're like halfway through and we haven't gotten to any yet? And then we'll get to the questions. Now we get to ask a question. Katie?
Okay, I'm going to go ahead, and launch the first polling question. This goes back to the non-entitlement municipalities. So everyone should see it come up. Go ahead and submit an answer. This is for credit, so please just make sure you pick something. All right, leave it open for a couple more seconds.
Yeah, so while the polling is going on, I think the state, I appreciate the state trying to put something together for us to help us with this loss of revenue calculation. I think this program is going to be maybe a little similar to what a lot of businesses and such saw last year with the PPP program, that as you go through it, it's like peeling the onion. You learn more and more about it, and some of the guidance might change some as we go through.
Yeah, I think it's important to reiterate again, too, even though the Treasury Department has submitted this interim final rule, it's not final. So things can change based on questions that are asked, based on, I know, National Association of Counties, National League of Cities, League of Municipalities, everyone is lobbying and trying to get clarification on several different things within the interim final rule. So things could change. So I think it's important to keep that in mind, that people have the chance to comment on the interim final rule until July 16th.
I just want to share the results. So most people did get it right. It was 50,000. All right, Heather, you can keep on
Okay, I
going.
got a couple of questions here for the group. Bill Homa asks, can we bypass the Chapter 159 and record the funds in reserve for capital projects or general capital or utility capital trial balance?
John, I think that goes a little bit with Derek's information about the state saying to take the loss of revenue in as Myrna and not a Chapter 159. I think I'd prefer to do everything as a Chapter 159, have it all in one place, so that when auditors come in, whether it's your municipal auditor or a federal or state auditor to come in sometime later, you have everything in one spot. It's not, someone over here, someone over there. If it was all in your federal and state grant fund and then went out to capital or whatever, it'd be easier to prove your use of the funds. I do agree that, I wouldn't do a separate additional 159 for loss of revenue, but I would charge the federal and state grant fund for the loss of revenue and move the money from there into the current fund as Myrna. Again, I think you want to show that trail.
Mm-hmm.
I agree with definitely showing a trail, being very organized with this and making notes everywhere, because as everyone that dealt with Superstorm Sandy money from FEMA, a lot of municipalities, they were trying to claw back money because they didn't have the correct backup or things were unclear. And, that has happened since 2019 through now, that they're trying to still claw back money from municipalities. Hurricane Sandy was in 2012. That's, we're 9 years from then. So who knows what staff is going to still be at the municipality. So it's very important to document things properly.
Another question from Fabiana comes in as, is sewer rent excluded if part of the current fund? And according to this, I think it is. It's one of those items that have to be reduced because sewer utilities are, part of the excluded items. Any thoughts on that one?
John, I don't think sewer is excluded. It's water, electric, gas, and transit or bus system.
That's true. Sewer should be included. There was a frequently asked question regarding rent, though, that there could be an issue. I will find that frequently asked question and take a look at that, and then we can send that out to the group.
Just on the one slide, it had that, it had the combined water sewer utilities as an excluded item.
If it's combined, there's an issue. If it's separate and apart from the water system, it should be okay.
Right. And on that GFOA form, they do have that as an eligible item for loss of revenue for sewage charges under user charges and fees.
Okay. Finally, Mike Carino asks, this shows overall budgeted revenue loss. Municipalities don't choose individual line items. And that's the question.
Yeah, that was a question I actually had, and Heather corrected me.
Yeah, originally before the interim final rule came out, everyone thought that it would be based on individual line items that were affected by the pandemic. When the interim final rule was released, it was based on total revenues for governmental purposes. So that was a big difference. And in places like New Jersey, where local tax revenue have come in stronger for a lot of municipalities than what was expected, and stronger than previous years, that has reduced the your total revenue loss.
Okay.
All right, so now we'll get into some of the other eligible uses and where we can touch on the broadband infrastructure. So water, sewer, and broadband infrastructure, water and sewer projects that are typically approved through the New Jersey Infrastructure Bank. Those would be included as an eligible use for infrastructure. stormwater system resiliency, green streets. There's a variety of different projects that are included within the water and sewer line item. For broadband investments, they really want you to look at areas that do not have access to broadband. The connection has a minimum speed of 25 download capacity and 3 upload. And in the local finance notice, there is some information about how some projects might need to receive LFB approval. There was a law, I guess, that was passed a couple of years ago that certain projects needed to be approved by the state. I'm not up to date on what that law is. But we can send the link to the law so everyone can review that. As far as public health expenditures are concerned, it's a broad range of expenses that can be used to contain and mitigate the pandemic. Medical expenses, behavioral health care, public health resources. Typically anything that was eligible under the CARES Act funding from last year should be eligible under this program. So vaccination programs, making ventilation improvements, public facility improvements to meet pandemic operational needs, such as spreading out your workforce, putting up barriers, creating an atmosphere where you can socially distance. The one difference is for payroll and covered benefits for employees. In the CARES Act funding, it was very broad, and for certain employees, you could charge off their entire payroll expense to the CARES Act funds. The American Rescue Plan is different, where you can charge off payroll and benefits for employees specifically only when they are working on mitigating the virus or COVID-19 expense. So for example, a lot of municipalities, you now have to clean vehicles more often than you would pre-pandemic. Payroll to do that would be an eligible expense. Anyone that is working on allocating the resources for the American Rescue Plan funds, that money could be charged off. You also, if you hire a company or you use your professionals to help you with coming up with a plan to use the funds, anything that is billed for that also would be eligible to be used, these funds for. The premium pay for essential workers, that's defined as up to $13 per hour in addition to wages, not to exceed $25,000. And that's for workers that performed an essential work during the pandemic. The federal government does want municipalities, if they choose to use the funds on this, to prioritize low and moderate income employees. Another eligible use is addressing the disproportionate public health and economic impacts of the crisis on the hardest hit communities, populations, and households. These areas must be designated within a qualified census tract, which is a low-income area that's designated by HUD. Within the local finance notice, I believe they have a link to the HUD website, which discusses the definition of qualified census tract, so you can make sure your area is in that area. For families living in the qualified census tract or other populations that were disproportionately impacted by the pandemic, some things that this would include is childcare, health or welfare, lead paint remediation, community health workers, hiring them to go out and have people have access to health services, Educational disparities, so helping with education, and then the COVID-19 related negative economic impacts. Travel and tourism and hospitality was hit hard during the pandemic, so you can use some of your funds to support some of those industries. Job training for people that are ready to re-enter the workforce. Household economic assistance. So food assistance for your local food pantries or for families in need. Counseling and legal aid for people that are being pushed out of their homes. Rent, mortgage, or utility assistance for people that have suffered during the pandemic. And then, of course, small business and nonprofit grants would also be eligible under this line item.
Before we move on to the next slide here, Bill Homa did have a couple of quick questions. One of them pertaining to the auditor. As part of the annual audit, will the municipal auditors be commenting that the funds are being used for their intended purpose? Bill, when do you ever see us put anything positive that you do into the audit? We only really put in the recommendations, and that means we're doing something wrong. If you don't get a recommendation, I don't see any verbiage. I'll check with Heidi, but I don't think I'm going to see any verbiage that's going to go in to give you a pat on the back. Let's see. Then we went down to, would a municipality be able to use the funds to upgrade and replace their existing residential water meters?
I mean, I guess we would need to know more information if there is an issue with the water meters, if you're just replacing them because you want to upgrade them. Not sure that that would be an eligible expense. Even if it was a necessary expense, my first thought would be that it wouldn't be included because they really want you to use the funds for upgrades to the water mains, the sewer mains, help with stormwater flow, flooding, mitigation type things. I'm not sure if water meters would be allowed under that.
Okay.
And part of Bill's question, I think, was these funds are going to be subject to single audit. So in a number of cases, because of the amount of money that you receive and utilize, you may not have had a single audit before, but you might have a single audit now.
But I don't know your feelings on this, but if they didn't have a single audit before and now one needs to be performed, to me, it sounds like you could use the funds to, I'm sure there would be an additional audit expense for that to do a single audit.
That's correct. And the expenses related to the single audit are eligible grant expenses for most grants.
Okay, great. All right, so now I'm going to turn it over to Dan Banker to talk about the small business grant program. We've had some experience working on small business grant programs under the CARES Act with Hudson and Bergen County. So we've learned a bunch from jumping into those waters that could help people with forming their own small business grant fund program under the American Rescue Plan.
Thanks, Heather, and thank you for the introduction earlier, Bud. As mentioned earlier, I was the team lead of the Hudson County CARES Act Small Business Grant Program. So I was heavily involved in all aspects of the program, including assisting in the eligibility requirements, making decisions regarding which verification documents to use, marketing materials and flyers, creation of the application, testing, retesting the online portal, reviewing applications, speaking to applicants directly, and updating the county throughout the process. And through that experience, we gained a lot of knowledge on the aspects of the programs that really worked well and other aspects that could have been done better. But at the end of the day, the program was a huge success. We were able to fund over 1,000 businesses of upwards of $11.4 million. So the program was a big success. I know that there's several municipalities out there that were unable to fund small business programs with the CARES Act money that might be considering the idea of using some of the funds from this round for some type of grant program. So we thought it might be helpful to the group to share what we found through our experience. So when you're implementing a small business grant program, the first thing that needs to be decided is which businesses are you trying to target? And that can be done in a number of ways. You can either do it by employee count, 25 or less employees, 30 or less employees. You can do it by gross revenues, specifically 2019 pre-COVID revenues, everyone that made 500,000 in gross receipts or less, $1 million or less. Revenue loss, actually comparing the 2019 pre-COVID revenues to the 2020 post-COVID revenues and only considering businesses that actually had a percentage loss. You can even look at the physical location of the business. Some municipalities have business improvement districts, so you can focus primarily on those businesses, or you can do a combination of multiple factors that I just discussed. When it comes to showing that a business was negatively impacted by the pandemic, there's really two ways of doing this. One is simply a certification statement that the applicant signs and potentially puts a few sentences together of an explanation of how they were negatively impacted. Or you can go to the next level and, like I said earlier, truly compare the 2019 gross receipts to the 2020 receipts and look at a percentage decrease. When it comes to exclusions, obviously that's up to the municipality. In my experience, one of the main businesses that was excluded was real estate holding companies. These are LLCs that were created to own a multifamily building. These landlords have their own programs that are available to them. So in almost all of the programs that I've researched, these kinds of businesses were excluded. Nonprofit organizations, this one as well. In Hudson County, they did exclude nonprofits. There are grant programs that are specific to nonprofit organizations. So that wasn't the focus in Hudson County, and most of the programs that I've seen are not focusing on nonprofit organizations. Franchises, businesses that opened after a certain date. If you're under the opinion that the businesses that opened in 2021, knowing the consequences, some municipalities may think that they don't deserve funds and it's more for the businesses that have been around for several years. And then also, if there's some sort of relationship between the applicant and someone in the administration of that municipality, could be a conflict of interest. So typically those are excluded as well. In terms of verification documents to make sure that you're abiding by the guidelines, the W-9 is the document that every applicant is required to supply, which includes the legal business name, the legal business address, and the federal employer identification number. This is a signed document, and this is essentially what is used at the end of the process for the applicants that were approved in order to cut the check and make final payment. I've also seen programs where they request bank account information in order to make direct deposits into the applicant's bank account, business account. But for the most part, it's typically the W-9 and sending checks to their physical location. The WR-30 is a quarterly wage document that the employer is required to submit. And this has a list of all of the employees and the number of weeks they've worked throughout that quarter. If you're doing it by employee count, you really want to do it by full-time equivalent employees. So part-time employees are not considered a, one employee. You actually do the calculation of total number of available weeks versus total number of weeks worked and come up with a full-time equivalent number. Of course, the 2019 and 2020 tax returns, especially if you're trying to do a program that includes revenue loss. And as we know, many businesses have filed for extensions for 2020. So we would also accept an extension document for 2020. The commercial lease, now this gets a little tricky. With Hudson County, we found that a lot of businesses either didn't have signed, executed lease agreements. So they were sending us just a copy of it unsigned, which we weren't able to accept. So we were going back and forth with the applicants. It took the review process a lot longer, and it took a lot longer for those applicants to get paid out. But the idea of it makes sense in the fact that, you want to be able to prove that the business still is in a lease for the foreseeable future. So that is, although it becomes a little bit of a hassle getting the documents, it's probably for the best to require it. In terms of the application itself, we highly recommend an online application, especially with the number of applicants you're dealing with, the required documentation, and all of the data that's being tracked. Now at Hudson County, we used a program that the county had already been using for other programs, whereas Bergen County, they actually hired a software engineer that was able to create a customized front end and back end to fit the needs of the program. Both worked very well. It's a cost factor, it's a time factor, but an online portal is obviously essential, especially when you're dealing with this many applicants. When it comes to a paper application, the reason why we're saying it's not recommended is in terms of tracking the information, gathering the documents, getting documents scanned, that becomes a little chaotic. However, not everyone has the same access to computers. Not everyone's as computer savvy as everyone else. So, in Hudson County, there was a great deal of paper applications. If my memory serves me correctly, of the 1,200 applications that we received, about 10% of them were paper applications. So, it was worth it to allow for paper applications. And one of the things that we did was we allowed applicants to go to their city hall building and submit their documentation. Someone at the city hall building would scan the documents, email it to our hotline, and we would take it from there. The other option, which didn't end up happening, was the idea of actually, a few people from the administration bringing a tablet with them with the online application and walking from business to business to help the business owners apply through the tablet. Nice idea, but a lot of work, but definitely a possibility.
If we could just jump in for 1 minute here,
Yeah.
Damien, sorry to interrupt you. I have a couple of questions, but we also have to launch another polling question as well. So if we would launch that polling question now, Katie, and then we'll go back to these last two questions that are up.
Yep, you should all see the polling question now about eligible uses of the American Rescue Plan funds.
Heather, if you're controlling the slides, if you can go back one slide, there was a question on the last slide that we had up while everybody votes. And Derek had asked, while everybody's voting here, Derek had asked a question earlier about, if it's revenue replacement for the loss of revenue, if we use that money as Myrna, is that going to factor in when we're calculating a single audit or not? I don't perceive it. I don't see it as an expenditure. So I don't see that helping trigger a single audit, but I don't know if there's anything unique that you've seen, Bud, Heather, that would say that.
Yeah, I would think you'd have to consider an expenditure. It's a charge to the grant or in this case, if you have it in the grant fund, then you're taking it in as a revenue in the current fund. It's an eligible item under the grant, so yes. Yeah, to audit it, we'd have to audit their calculation for the loss of revenue.
Oh, and Heidi just chimed in, so that's all. That's the answer. It should be.
You should all see the poll results now. So C was the right answer. Most people get that. A lot of people are paying attention. We love to see that. Thanks, guys.
When we went back to that last slide, the question was pertaining to the certification by owner. Could we get a sample of something along those lines of what that looks like? Or,
yeah, I could definitely send around a sample of what we used in the past. I mean, it's a pretty simple statement. And at least for Hudson County, there was no explanation needed. Some municipalities like to actually have, a paragraph from the owner stating that, how specifically they were affected. But in Hudson County, it was truly just a sentence that stated, the business owner, was negatively affected by COVID. But I can send you that language. I can send the group language.
And then a final question with the small business grant program. If the business has only 1099 employees, was that acceptable for the grant?
So for all the grants I've been a part of, no. 1099s were not accepted. You did have several applicants submitting the 1099s of their business, of their employees, and hoping that they would be considered employees, but no, they were not. However, a business owner was able to apply and was eligible. In Hudson County, your employee count mattered, and it would change your award amount. So people were trying to get more full-time employees, and 1099s were one way of trying. However, 1099s were not considered employees in terms of Hudson County.
Okay. The only other question that's out there right now is, should a municipality establish a project team to review these documents, and who should be put on the project team?
So that's a great question. And the conflict of interest comes into play here. Not necessarily saying that you should hire an outside entity to do all of that work. However, it definitely helps to have an outside entity as at least assisting. And the review process does take significant time, not only just actually reviewing the documents themselves, but I'd say 50% of the applications that you'll receive will be fully complete. The rest will have answered a question incorrectly, or they uploaded a document that was the wrong document. So you're truly on the phone back and forth with these applicants, multiple times until they are able to submit their full application. But it definitely needs to be multiple reviewers, and I highly recommend different levels where they're truly separated from one another. Like even on our team, our internal team, we have 3 different levels where you have initial reviewers that are using a checklist, then a secondary reviewer, and then someone from senior staff making the final recommendation. So I definitely recommend multiple layers of your internal review team.
And I think with the small business grants, and even in Passaic County for the municipal grant program, it was not only government employees, but it was outside firms. We were involved. We had several people involved from our firm. The auditor can be involved as well, because when you're looking at different things and determining eligibility and what is the best way to go, there's always a good conversation to have, and people think differently. So you really need to be careful with what you're spending your money on, not only for small businesses, but even your expenses and stuff. And it's good to have another set of eyes that isn't in your internal government group taking a look at it to give a different perspective. And if you do hire an outside firm or you use your current professionals to help with these funds, that is all reimbursable under the program.
All right, I know we're running a little over on time here, but Dan's got two slides, I think, left to go.
Yeah, I'll go pretty quickly through it. So the time frame of the application window, I think most people just assume first come, first serve is the way to go. I personally disagree with that, just in the sense that not everyone has the same access to, computers and cell phones and aren't as, savvy with computers. So I like the idea of an open window, whether that be 1 week, 2 weeks, a month, doesn't matter. And if, obviously there's a total fund amount, there's a total number of businesses available, and there's an amount of award amount for each business. So you may have more businesses that can receive money. So at that point, establish a lottery for everyone that was able to get in the time frame allowed. And I think that's a more fair process than first come, first serve. When it comes to the award amount, that is obviously, in my opinion, the biggest decision that needs to be made, because it's a balance between how much money do we have, how many businesses are we trying to help, and what is the minimum amount of money that will truly be impactful to a business. If you spread it too thin and each business is getting $500, is that really going to be an impactful amount of money to these businesses? So that is always a big decision, needs to be decided early on. The more data you have to use before the program, knowing how many businesses there are in your municipality, how many are small businesses, that all that information really helps when it comes to making the decision on this. And when it comes to the award amount, you can either set it, as a standard amount. Everyone that applies that's eligible gets $5,000, or you can do it tiered based on employees. 1 to 10 employees get $5,000, 11 to 20 get $10,000, etc. Or even based on percentage loss of revenue, 10% or less gets 5, 20% gets 10. So there's a lot of ways to go about it. But that really is a very important decision that needs to be made, because you might be, if you spread it too thin, you're not truly helping businesses. But if you don't help enough businesses, that's also a problem as well. And this is just the last section. The online application, it helps you with the easy upload of documentation. You make a lot of the fields, the required fields required, so they can't move on through the application and submit an incomplete application. It's helpful if they can go log back into the online application, so that if they weren't able to upload a document originally, they can go back in on their own, so they don't have to contact you and email you the document. It's helpful to have a dedicated phone number and email address for all inquiries, have someone there to be able to answer the phone. The ability to mass email your applicants or a subset of the applicants. If you have a group that has incomplete applications and the deadline's coming up, you want to give them a last minute notice, like, hey, you need to submit your application by Friday or you're not going to be considered. And then obviously it allows you to send reports, because everything's turning into data, Excel file, et cetera. And you can give, your team updates on which businesses applied, what their status is, the award amounts. And I spoke about our internal review process, where we have layers of the internal team, which I really think is helpful. And then eventually, at the finish line, you're making payments to these businesses that really need it. So I highly recommend considering a small business grant program if you're capable of doing it. So.
All right, there were 2 questions that popped up, maybe a third in the chat there. The first one has to deal with fraud. It's great to help small businesses, but concerned about fraud. What type of safeguards can be put into place to prevent possible clawback if we help a business that filed false documents?
Yeah, and this is a tough one. And with Hudson County, we did our absolute best. going back and forth with the county and determining what documents needed to be provided. You know, we, at any point, you could have fraudulent documentation, and you know, in terms of backlash and what happens, luckily in Hudson County, I don't believe there's been any issues of that yet. And I do believe that they did get audited. But in terms of fraudulent documentation, there were several cases where, and I think as a reviewer, you need to, you know, try to understand, just if you're looking at a document, if something looks off, you know, you really need to consider if that's an accurate document, if you need to request an additional documentation to verify. So, but yeah, I think it's very much on the reviewer to make sure that what you're looking at is, you know, what you think it is.
Well, and I think a county program is much more difficult because the county's much larger, different municipalities. It's impossible to know every single business that's out there. If you're within your own municipality doing a grant program, you most likely know about the business, or someone within the team should know about the business. And you might have even heard from the business owners about their struggles, whether it's through the Chamber of Commerce, or just contacting officials directly. So you have to have someone part of the team that is aware of the small businesses in the area.
Katie just threw up the last polling question. We're going to put that up while we talk about these last two questions that we have. One came in: if we use an outside service and we use the American Rescue funds to pay for the service, I don't know, is that a question? Or is that if we
Yeah, so, and Heather mentioned that earlier. So yes, you can
Right.
use the American Rescue funds to pay administration fees if you do use an outside entity to help with your program. Yes.
Okay, and then the final question here coming from Joe, the final one that I have so far, can be answered at the end, but in the NEU agreement, it states we should encourage no texting and driving and also seatbelt use. It wouldn't make sense to put in RFP or bid. How do you think we can demonstrate this in the contract?
I'm not sure about that.
Yeah.
We'll have to get back to them, Joe, on that.
And then that's all I've seen. I don't know, Bud, if you see something else. Oh,
John,
yeah.
Bill Homa had a follow-up question about the outside service.
All right. Let's see.
I think that's the one that we answered about if they're able to use the American Rescue funds as in order to pay like administration professionals, and you can.
What if there's a duplication of benefits or an expense? We use funds for the what if there's a duplication of benefits or an expense we use funds for is determined ineligible?
So the duplication of benefits is an important thing to be aware of, especially if you're doing a small business grant program, because one, you need to find out if your county is doing one, and two, a lot of the states are doing small business grant programs. In addition, part of the American Rescue Plan legislation is giving money towards a restaurant program. I'm not sure how they are doing that program and who is eligible and who's receiving funds for that. But it's important to keep in mind, because you don't want to be giving grants to different businesses that have already received grants or were part of the PPP program. So there needs to be some sort of documentation or questions about that as well. If there is a duplication of benefit that you didn't catch, or if there is an expense that the federal government is telling you that is not eligible. The federal government will let you know in writing that an item is ineligible. You have 60 days to respond with a written request to make your case of why you think it's an eligible expense. The federal government will then take 60 days to reconsider. And if it comes back after the reconsideration that it is still an ineligible expense, the municipality has 120 days to pay the funds back to the federal government. So it's a pretty quick timeline. And we all know that, paying out money can be a slow process. So you just need to be aware of the timelines and think about or come up with a procedure of what you would do if there is an ineligible expense that the federal government is trying to get paid back on.
And finally, throughout your experience with the small business grant programs, what would you say is the most difficult decision that needs to be made while creating the program structure?
I'd have to stick with the determination of the award amount, balancing act of total funds, total businesses, what's the minimum amount that's impactful. That really becomes a crucial decision. And like I said, the more information that you have about the businesses in your municipality, especially the ones that you're trying to target, the better, the easier it'll be to make that decision. So yeah, definitely the award amounts. And I see Michael Guarino's question, is it possible to ask in your questionnaire if they applied for any other aid? Yes, it is. And we actually required that in Hudson County. And they were required to submit the type of fund, whether it be county, state, federal, or private agency, the amount of money that they received and on what date. And, there were applicants that had received 5 different, grants. And we had that information. And then from that, you can prioritize if you want to prioritize businesses that hadn't received any, you can do that. So the more information, the better.
And with the duplication of benefits for small businesses, it's difficult because, like Dan said, they could receive $500 from another grant fund. Now, if your municipality decides to give them $1,000, so they have $1,500 total, to me, that wouldn't be a duplication of benefits because their business probably suffered more than $1,500. So like Dan said, you have to find that information. They need you to provide you with that information of what they've received. So then you can make a determination if there is a duplication of benefits.
Okay, and I see we have the final polling results and they were paying attention still.
Yeah.
That's a good thing.
Okay, I don't see any more questions. So I'll wrap it up a little bit. Thanks, Heather and Daniel. You guys obviously have really immersed yourselves in this stuff and provided some really good information. I appreciate it.
Thank you for having us.
Yeah, no problem. Thank you for having us. That was exciting.
And I knew this was going to be a good topic, and obviously with the amount of questions and stuff we had, we went well over, but it was really good information. Again, thank you. And let's see, early October is going to be our next CMFO Roundtable on a fairly recent fraud that both John Reinhardt and John Mooney had investigated and are going to present. And I think, Katie, you're up.
Yep. So thank you so much, everyone, for attending. Just so you all know, when you exit the webinar, there's going to be a survey that comes up, and that's how we issue out your credits. So please fill that out. If for some reason you can't, we'll send a follow-up email with the survey. You'll also get a copy of this presentation. I know some people were asking. You'll also have Heather and Dan's contact info, and we will be sending out a recording of today's webinar as well. So thank you again, and I hope you learned something and found it valuable.
Thanks, everyone.
Thank you.
Everybody.
Thanks, everybody.